What's up everyone? Just wanted to make this video. This is a very beautiful weather, by the way. This is one of my favorite kind of weather, where it seems like it's not too hot, also at the same time it's not very cold. And also there is some wind out there, and I'm on a big field just walking around. Some people are playing the other side of the field. So just think of myself like, why don't I make a video? It would be useful for, because it has been a while that I'm not making a video. Especially I'm making the video on the night time after coming back from the office, but on the daytime I don't seem to get much time, to be honest with you, to make the video. So today I have got some free time, so that's why I'm making the video on the daytime. So there are a couple of things I want to talk about today which would be very useful for the beginner trader, for the people who are trading for a while. Some of the great tips I'm going to share today. uh, let's just say uh, how you need to protect yourself from trading. And especially there are lots of people these days, on the chatting on the social media, on the Twitter. They say some companies are very good. Stock tweets is one of the platform, social media, where people say a lot of things. Like some newbie think like they should follow the stock tweets, the stock tweets which people give real time uh, alerts and stocks and their thought process. And the number one reason why you should not follow this kind of other people's thoughts and alerts is, you never know who are the people and what they are sharing. And it is very tough to fall for any kinds of investor, because if you are following on the stock tweets and people are saying like, this company is good, this company is bad, this company is going to move forward, like the price is going to move way up, one coming soon, buy, it will going to the moon, this kind of thing, it makes people very confusing, especially people who are new trader. They become very confused about what they should pick. And sometimes even in a hot stock market, like the stock price of a certain stock is moving very high, suddenly the other group, the other people, they are saying like, check out this stock, this ticker symbol, this stock is doing great, it's moving high, it's going to the sky, it's going to the moon, it has some sort of press release and it will blow up. So this kind of thing make things very worse, especially if you are a new trader, and you will be confused because so many people are saying so many things, and you are trying to figure out who you should trust or who you to believe. uh, Oftentimes avoiding this kind of people, their comments, their thoughts, their uh, stock picks, their whatever they write on the social media platform, don't even look at that. That is the best thing you can do. The reason here is because you don't know the people, these people who are sharing this kind of thing, and you are looking for their thoughts, their stock picks, whatever they're sharing, their comment, and you're considering this as your judgment. Let me tell you, first of all, you don't know these people. You don't know whether this people is a new trader or this people is actually is some kind of expert. So a lot of the time new people on the stock tweets, they also try to express their thoughts, comments, share, and do some commenting and all that. So you never know who is the people is saying these things. And if this kind of things is shared by some kind of new trader, it's very risky, because new trader often they don't know what they are saying. They are still learning, they are still trying to understand about the market, and they are at the same time commenting these things, saying their whatever that comes into their mind. And they are saying like, this stock is going to be going to 2, going to be 3. So this kind of thing is very risky. Like if you listen to a new trader, I mean, you cannot manage your risk. First of all, you will fall for the wrong stock picks, because a lot of the time new trader, they say this kind of thing, they made a lot of mistakes. So you cannot trust someone who is a new trader, to be honest with you. And stock tweets is a platform where you never know, I mean, if there is some kind of expert new trader or whatever who is sharing what thoughts. So any kind of consideration on your part, on your regard, is very much risky. You will going to end up losing. So my judgment, my thinking is like, don't fall for this kind of comment or thoughts or sharing of other, whatever they're saying. Just don't listen to them. I mean, uh, trust your own process, trust your own stock picks. As I always say, like, if you know when to exit, when to get out from the trade, if you know the rules, if you know some of the, like, what you should be aware of, what you should be avoid, this kind of thing, if you have the right kind of mindset, you don't have to be dependent on nobody. And nobody speaks, you need to consider, to be honest with you. I mean, it's very easy. Just search some stocks on the stock scanner, and everything else is psychological. Like, you see, I mean, if the loss is happening, you just exit from the trade immediately. Try to make it as small loss as possible. If it's continuously to gaining momentum, you ride on the momentum, makes 15-20% or 10% of that gain. I mean, that is enough. I mean, psychologically, if you are becoming like strong, that two things is enough for you. And also some of the other times, a lot of the new trader got confused because they thought they see a lot, I mean, good news being published as a press release by the company, and they're thinking like whether should they get out of the trade or not, because the news is so awesome. I mean, let me tell you, you first of all need to risk management. I mean, you should risk your, I mean, you should manage your risk first. That is the most important thing. It doesn't matter how much the news is good, how much the potentiality of upward trend the news is having and all that. When I mean, the stock price is falling like 10, 7, 5%, 15%, 20% straight, you should not be participate on that trade, no matter whatever the good news is. Risk management is the key. Like, you have to have some sort of good risk management skills. When the price goes down, you don't have to be on that trade. When the price is going upward, then be on that trade and ride on the momentum and make money. Don't lose money when the price is going down. I mean, that is the most important thing. Some people, they have like really great loss is because of this one thing. They see like, wow, the news is so amazing. I mean, let me hold for a while, let me give some more time, let me hold 3 or 5 more minutes. The price is going to go upward, it will going to be upward, it's just going downward for a while. No, bid on that moment of time when the price is rising up. Don't be on that trade when the price is going down. So if you are a good trader, you will know like the support level, the entry level, and the resistance level when things try to, I mean, the stock tend to hold in the key level. And if the price goes down on the key level, you are at big risk. Then if it tends to continuously go downwards, you will have to cut your, like, you have to exit from the trade immediately, rather than making your losses go big. And if the prices is like breaking out the key level and it's tending towards the upward trend, you ride on that momentum, you be on that particular moment of time. Then you will see green color on your account, like your money is growing, you're making money, you are taking profit. That time you should be participating on the stock, not the stock price is going downward trend. This is very, I mean, important thing. Like, sometimes what happens is people very, I mean, they don't, I mean, exit from the trade because they think like it will bounce back, it will recover, and it will make a lot of money because the news is awesome. Some of the biggest loss people have is with the good news, when people may be participating on a stock trade lately. Like, you fail to entry earlier, then you entry later, when the price seems to go down and you see like the news is awesome, the news is amazing, it will go up, and you hold for the stock for a long time as hoping, and later end up even losing big, and you are not exiting out of that trade thinking that, well, the news is so awesome, let me hold for a while, for more time. That is the number one mistake. Some of the biggest mistake people make and go down like 30, 40, 50, sometimes 60 or 70% in one single trade is because of this kind of mentality, this kind of thought. Because of the news, awesome news, okay, let me hold for a while, it will go up. No, that's not a good way of trading. As a trader, the number one thing you should be focusing on is the risk management. How you risk manage when the losses tend to go like 3%, 4%, 5%, 6%. That's the red button. You get out of the trade immediately. You don't have to be on that trade. When the price, that's why you grow your account. If you, every day, if you like make your losses small when you are losing, and when you are gaining, if you are making like more gains, and overall, like if your gain seems to be growing over time more than when you are losing, and your gain becomes bigger than your losses, at that time you make money. You have to maximize your, you have to maximize your gains and minimize your losses. You have to risk manage your losses. That is the number one key. And overall, like say for example, if you are participating on any trade, if you are making 10%, 15%, 12%, 15, 20, 30%, whatever, if you make this kind of money, and when you are losing like 3%, 4%, 5% or 6%, then you get out of that immediately. Overall, whenever you are trading, if you are winning more times in while you are trading, and if your gain becomes more bigger, and when you are losing, you are making your losses small by exiting earlier, that's how you grow your account. That's how over time you will be making more money, as you will be taking more profit and smaller loss. That way you make your money grow. That's the number one thing. It's not about like any stock picks, any stock picks would going to be amazing for you or making you a lot of money. No, you have to do it on a continuous, on a regular basis, every single time. Sometimes you will be right, sometimes you will be wrong. When you will be wrong, you have to exit out of the trade immediately, and over time, if your gain becomes more bigger than you are losing, if you are making make your losses small, at the same time when you gain, your gain is bigger, you're gaining continuously, consistently, continuously over time, your gain seems to be bigger, and when you are losing, you're making your losses small. That way, on average, overall, you will be making more money, and that's the single most best way to make money on the stock market, especially on the penny stock niche. You have to be able to get out of the trade immediately when things seems to be going wrong. That is the number one weapon you have to have. You have to have, like, you don't be hesitate to get out of the trade immediately when you are losing like big 6%, 7% things seems to turn out these things. Leave that trade, get out of the trade immediately, don't hesitate. If you have this kind of strong psychology, strong mentality in terms of getting out of the trade when things go wrong, you will overall, on the consistently basis, you will be making money. That's the thing I can assure you, and that's the number one difference between a new trader and a good trader. New trader, bad trader, these people, they make their losses go big, while a good trader who is winning more times, they never make their losses go big. They realize that it's a continuous process. They have to win every single time consistently. They have to make their gains become bigger than they are losing. So that's why they manage their risk management. That's why they manage their trade, and they are making money consistently over time this way. It's not like they're thinking like, oh, this company is amazing, let me hold for a few more days, the news is awesome, it will go bounce, and they're guessing, they are like predicting something. Expert good trader never predict on things. They always react on the price action, and based on that they take their profit or get out of the trade immediately. If you have a strong mentality, strong mindset in order to managing your risk, then you will be making money. You have to have some sort of warrior outlook while trading. This is not an easy thing. This is a psychological war. This is a psychological war between you and yourself. And you cannot take this in a soft way. You have to be very strong in terms of managing your risk management, risk kind of thing. You have to have different views and outlook while you are trading. That is the most important thing. When you are trading, if you are thinking like, oh, I'm trading, wow, this is not fun thing. This is a war. Okay, this is a dangerous field, especially on the penny stock niche, where so many scammers, so many people who are hurting other investors, in terms of for their own gain. There are lots of pump and dump going on every single time. Like lots of promoter, they pump up the stock, make the price go up, and when the insiders they start to selling, they get out of the trade and immediately dump the stock. And all the people who bid on the peak of the price move, they take the loss of the money. They lose almost 50, 60, 70%, like from that trade, because the stock has been dumped. Sometimes offering comes in, and right in the trade, within 5 or 6 seconds, the stock price dumped to like 50 or 60%, because they are giving some sort of big institution firm with a discount price offer. This kind of thing happens, so you should have to be aware of the situation of this kind of things happening every single time. So you cannot take stock trading is some kind of in a light way. You have to have warrior outlook in your mind. You have to have warrior outlook into your head. Like whenever you are trading, you have to have this kind of things running on your head, so that you become aware of when things start to go wrong. That is the number one thing that's set apart from someone who is a good trader and to someone who is a bad trader. A bad trader, new trader, these people, they don't know about this thing. They don't react. They are slow to react. They react lately. They get manipulated by hope. They hold the stock for a long time, thinking about that news is awesome. Okay, let me hold this stock for a while. This stock is going to bounce and all that, and they make their big losses go big. Good trader never make their losses go big, no matter what. They don't even care about the news, whatever the news is. They only participate on the trade when it's rising on the top, right? When it's going in upward trend and rising on the momentum on the way up, then they bid. Not necessarily they bid on the way down. And when they are bidding on the way down, they realize they make a mistake. They get out of the trade immediately, and they never hesitate. They never upset about those exit. So they always manage their losses. So that's the thing that's separate from a good trader and a bad trader, and that is a very important thing. One of the most important psychological thing on a stock market, on a stock trading, especially on the penny stock niche. That is the number one biggest mistake, number one biggest thing for your success or failure on the stock market. So in this video, what I have talked about, like never share, try to follow people's stock picks, thoughts, comments on social media platform, or be your own self. Learn the things so that you become your own, sufficient enough so that you can pick the best stocks when, and you know how to trade the psychological thing, and you know how to pick the stock. Nobody knows, like which stock is going to move up. Good traders just react on the price movement when happening, and they take just advantage of the price move. They know their psychological thing and their strategy, and they react according to their psychological things. Though they don't become distracted, emotional about any trade. That's the thing about trading, and a stock scanner. There are lots of stock scanner out there. There are free stock scanners. There are paid stock scanners who, by searching on, you will find out which stocks is moving very up, which stocks is running very up, like who are the which are the stocks that has been biggest percent gainer in that particular day. You can find out any, I mean, any companies, the top 10, top 5, top 50, the biggest percent gainer from the scanner. There are lots of scanners. I mean, I don't know, I mean, which scanner should I talk about. Maybe I should make a separate video about the stock scanners that you can use, and just see about those scanners, try to find those things. There's so many stock scanners. So you can find out like the biggest percent winners, the biggest percent gainer on the stock, on the stock scanner, and then you can choose to bid any one or two stock. Then you just play according to your rules, strategy, mindset, psychology. That's it. That's how you, I mean, make the money. Psychologically, you have to be very much focused on in terms of making your gain bigger and exiting out of the trade. That's the two thing matters. And on the stock scanners, like you can find out the stock, the biggest percent winner, the biggest percent loser, the biggest percent movers. Like you can find out literally, like if you search on the stock scanner, like the stock that are moving 25% and above, you will see the list of stocks on the penny stock, and you can find out what are the stocks in what kind of price range you are looking for. Let's say, for example, if you are searching on some stocks like in between $1 to $5 range, then you select that. Then you see any stocks that have moved over like 40% and high on that particular day. That at that time you can also search like by volume, any stocks that is having at least 1 million or 2 million volume. Also you can find out the float. So by this way you can search on the stock scanner, I mean, which stocks are moving, and according to your preference, whatever the price range of the particular stock price you are trying to beat, you can make decision. I mean, the stock scanner will show you the list of stocks that has been moving like 50% and up, 40% and up, according to the price range that you are giving command. I mean, it's totally up to you. I mean, it's so easy. All you have to do is just run the scanner, and the scanner shows you everything, every information, like what are the best stock that has been running and moving in that particular day very high, 40% and above move, 50% and above move, and you can see the top one or two list. And that way you can make your decision while participating on the trade. Just whatever the stock that comes on the list, 1, 2, whatever, just try to click on that stock, search on the, see on the chart pattern on the past, that in the past how many times the stock, this particular ticker symbol, stock has moved up, has failed to move up, and what are the support level, key resistance level, key level where. And you can find out like if the stock breaks off that key level and starts to go down, it's a dangerous sign. If that stock hold on that key level and start to go up, and if you see like there is no it's a breakout type of thing, like if there is no support nearby of these things and the stock tends to like break the key level and it starts to go up, then it's a breakout. Then at that time you should make your entry. The stock price is moving up and all that. So that's the thing. And to sometimes, I mean, you can see on the stock scanner and on the 1, 2, 3 or 4, whatever, according to NASDAQ, New York Stock Exchange, or in the OTC market. And if you see on, as you search on the stock scanner, like let's say for example you gave like 40% above price gainers during that particular day, only show me that stocks, and the price range is in between 1 to 5. So you search on the stock scanner and it gave some like 3 or 4 list. Then you click on the ticker symbol and you see the price action, the price movement that is happening, and try to concentrate at what speed the price is moving upward or at what speed the price is moving downward. If you see any stock that is moving in a very high speed way, the speed at which the stock price is moving up is very quick, like it's very like very speedy, then you can quickly get out, get into that stock. And as the momentum happens, as it keep continuously going up, you just ride on the momentum, take some quick profit. When it's begin to crash, you just get out of that trade immediately and take your 5 7 10 or 15%, whatever the price move have happened, and take the advantage of that situation. That's how you make money. That's the thing. Again, like, if you see on the top 4 or 5 list, if you see any stock that, according after searching on the stock scanner, and if you see 1 2 3 4 or 5 number list, and then you read the news, and if you see any blockbuster amazing news has been published, at what time the news has been published, and since when the stock price is reacting accordingly. If you see the company have released some sort of press release, and the news is out, and the stock is reacting according to the news, such an amazing news, and the price is moving upward direction, then just bid on the stock, because the news has been published, the news is amazing, and the behavior of that stock price movement is reacting according to the good news. So since the news is amazing, as the price is moving up, you bid on that stock, ride the momentum, and make profit again. That's the thing. Sometimes you have to be, you have to have the right timing. That is the very important. And the right timing means, especially I would encourage you to be wake up early in the morning and try to bid on the pre-market. Pre-market, especially in the morning, or especially right at the opening of the market, 9:30. What happens in the pre-market, a lot of the time good news comes at the time pre-market, in between 4 a.m. till 9:30, in between any time of that. And whenever the news gets published, the stock price tends to react immediately, and the price moves very up very quickly within a short amount of time. Then when the market opens, it also try to go up a little bit, up and down. So, and by the time it uh, make a price movement, then a lot of the trader around, like in the United States, they already know the news is amazing and all that. Some latecomers then come, and since the price goes, then the price seems to go down, and the people who get in late, they get crushed, they take the loss, they got annihilated as the price of the stock price is moving down. So that's why it's very important, the timing and your entry and exit time, especially if you can make an entry earlier. That's why trading on the pre-market is very important, because if you make an early entry, then you can ride the momentum on a bigger ratio. Like, if the price tends to go up from 40% to 50%, 60%, and if you be an early bidder, like while in the 60%, it can move to 100 or 120%. Then you can take a bigger percentage of the gain, since the price movement is happening in the morning. That is bidding on the pre-market. And if you trade on the after the market open at 11 12, sometimes the price may move up, and the price sometimes move up, keep continuously move up, but the price movement that seems to be not very big in terms of how much the price movement happens on the pre-market. Sometimes in the regular hour, 11 or 12 a.m., the price seems to go up, at the same time it goes down. It's a roller coaster, go up, go down. There is not a bigger type of momentum is happening on the way up, but overall the price is increasing. Sometimes it goes increase till 1 p.m. the movement is slow. Then after 1 or 2 p.m. the price seems to be crashing, it's going down. and people who bid at that time, they take the biggest loss. So that's why it's very important. Like if you bid on the pre-market, you have an advantage over the other trader who are late, and also take the most biggest price action of the price move while riding the momentum on the way up on the pre-market, because pre-market, the news is being published on the pre-market, and in the pre-market the news seems to go up very quickly within a short period of time. So that's why if you are an early trader, if you entry on that trade earlier, the possibility of chances of you making the money is way more than those people who are coming late. That's the thing. That's some wow, what an amazing, great tips and secrets I have revealed on this video. If people, you are watching that, that's a very valuable and important, lessons that I'm sharing with you. And when you will be trading, then that time you will realize that how much valuable this information is. A lot of the people don't know about these things, of the time frame, timing, managing their risk, their entry, exit, how to make their losses small, how to make their gains bigger, what not to see while other people on the social media and get distracted and all those kind of things. That is very important. You make those kind of mistakes later, which will cost you a lot of money, and then you realize that, wow, these are the mistakes that I have made, and by that time you may have lost a lot of money. And I'm sharing with these things, that's saving you a lot of money. Don't have to be on the loss kind of situation, and then realizing this kind of strategy and tactics which you need to adapt later. So this video and tips are very helpful for you and any trader, like whoever is trading, for not learning the lessons with making some big mistakes that have cost you losing money. So some of the good things I'm sharing, if you utilize that, you will save a lot of money, at least not making a mistake by losing a lot of money, then realizing the strategy and all that. Of course you will learn while you are trading, and you will develop your own tactics, strategies and all that, but it's better like if you take the thoughts of other good traders and try to apply those to your own strategy, and then this way you can be a better trader by not making the same mistake, and also at the same time becoming aware of those kind of situation that might happen. We are sharing, or I am sharing in this video, by utilizing this kind of situation, by adapting accordingly to your strategy and not making the mistakes, and be aware earlier, that way you become more smarter. And that's the one thing, like that's a good thing, like uh, you don't have to make a mistake and then learn from your mistake. Don't be that guy. You can learn something by watching other people, by not making the mistake by your own, rather seeing other people's, taking some good advice out of other people, and not repeating when, in terms of your own situation, in terms of your own case. So that's the thing. You don't have to make a mistake to learn something. I mean, of course you learn from your mistakes, but you can also learn from other people's mistakes. So that's the thing you should start thinking, like I can learn from seeing other people, or by I can learn from other people's mistakes and try not to repeat that mistakes on my own. That's a good thing. And another last one good advice I would like to drop in this video, because I've been sharing some of the you know very amazing advice on that video. So let's make it more weightful in terms of the good advice kind of thing. That's another good advice is, when you are trading, in the penny stock trading, don't try to pick a lot of stocks at a time. By that I mean, Like, you don't have to trade like 5, 6, 7 stocks all at once and then try to monitor all the 7 stocks, which stocks are moving up, which stocks are moving down, and all that. No, that's not the way to make money on the penny stock niche. You will be distracted and dealing with so many stocks that you will not going to be focusing on any one particular or stocks that are making the big move and trying to see the price action and trying to strategize accordingly. I mean, it's not a good strategy, to be honest with you. Try to pick 1 or 2 stock at a time in a one single day, and be just totally focused on that one particular stock picks. In one day, you just trade one stocks, and one stock that you pick, you put the most of your money. So according to your uh, position, like according to your portfolio, according to your like amount of money that you are having the brokerage account. So try to put, let's say for example, uh, if you have like, say for example, you have 30,000 money, 30,000 US dollar in your brokerage account. So when you run the scanner, try to pick one stock that have a good news, support all the indicator, or maybe sometimes it don't have a good news, but the stock price is moving very up and the price action is kind of awesome, the chart looks amazing and all that. So you decide to entry on that bid. And also in the pre-market, you are being decided to bid or participate on the stock earlier. So that's the good thing. So you, from 30,000 US dollar, you put like, say for example, $20,000 into that one trade that you have see, like that is. So sometimes while bidding, I mean, you will see some of the biggest price action that is happening on the stock market, and you run the scanner on the pre-market early, and you see some of the stock that has been moving like 40% or 50% above, and it keeps moving up. Then as you run the scanner, try to be on that stock totally focused, rather than participating on 6 or 7 different stocks and then become all messed up in terms of monitoring that particular stock. That is not a good strategy, to be honest with you. One of the best strategy, to take 1 or 2 trade at a time in a one particular day and be totally focused on that particular price move. And when the price action happens, you just become totally focused on the price movement that is happening while you are watching, I mean, very attentively whatever the price action is happening. And based on when the things start to go wrong, if it goes down after you ride on the momentum and make some profit, and it starts to go down, then you get out of the trade immediately. So you have to continuously look on the price action in order to be focused on the price action that is happening. So that is very important for you. Like if you have some kind of uh, like you are bidding on 5 or 6 different kinds of stocks all at once, then you will not going to be able to monitor those kind of price action that is happening with all the 6 different stocks. So my another good advice to you is, whenever you are trading, try to be focus on one stock at a time, bid on one stock at a time, and and be totally focused on that particular stock movement that is happening. And by that way, you can actually totally focus on the price action that is happening. If it's continuously moving up and up and up and up, then you decided to ride the momentum, your account is growing, you're making money, it's amazing. Then when it start to go down, and if it's a big drop, the then you get out. I mean, if you can make 15 or 20% in that way, in a quick price movement, especially in the morning in the pre-market, then it's an amazing thing. You should strategize. So always go for 1 or 2 stock at a time. Pick those stocks which have been running on the scanner, and the price action is kind of happening fast, or it's amazing, the chart looks amazing, there has been released some sort of press release or news, and the stock price is moving very up. It's also in the morning, and the price action is reacting according to the good news. So the news, I mean the prices keeps going up. This way you will be making a lot of money from the stock market, especially on the penny stock niche, by simply riding on the momentum on the way up as the price is going on the upward trend. So that is the thing, like try to, for that reason, I mean you need to be very careful in terms of bidding only one stock at a time, and try to be totally focused on that particular stock so that you can see the price action that is happening on that particular stock, and try to make your entry and exit accordingly. In that way you can take a quick 15, 10 or 20 or 25, even sometimes 30-40% price move and 40% move. It's amazing. Like let's say for example you have a $30,000 in your US stock, any brokerage firm, and you decided you have watched one stock that has been moving very up. It hit on the scanner, it's in the morning early, the news is amazing, and the price action is happening according to the good news. So you are an early bidder as you bid on the pre-market, and the price is just to go up. So you ride on the momentum as the price action is happening on the way up, and then you put $20,000 into that. You have a $30,000 portfolio, but you put, let's say for example, $20,000 on that stock bidding. So as this stock is going up and up and up, if you can make on the way up 10% of your money, let's say for example you make 10% of money, 10% of 20,000 is $2,000. If you make, let's say for example 15% on the price move, you made 15% profit. 15% out of 20% is like $3,000 in one day. So after you sell and exit out of your position, your $20,000 portfolio becomes $23,000. So you have now $23,000. So 15% gain is amazing. By any chance, like say for example you have made $40,000, I mean 40% on one trade, so your 20%, I mean $20,000 will become like $8,000 as profit, which will add up to your $20,000 portfolio, and it will be becoming, after you exit out of that trade with $8,000 profit, it will be $28,000. So just imagine if you can make like 40% money out of your stock investment, and within 1 or 2 hours this kind of price action, just, or maybe sometimes happens within 30 minutes. So within 30 or 1 hour, if you can make like $8,000 and make your 20,000 turn into $28,000 in the next trade, you can put that $28,000 and make way more bigger money. At that time, $28,000, 10% gain, it would be $2,800. 20% gain, it would be like $5,600. So see, as you will be growing your money, the more bigger percentage gain which you will be making later by participating on any trade, it will also be bigger. So that's the amazing thing, like to growing your account consistently, continuously, even with like 10% gain. I mean, can you imagine $20,000 out of $20,000, 10% gain is $2,000. $2,000 is a lot of money in terms of in other country, $2,000, that might seem a lot. In US, for some people $2,000 might not seem very big amount, but in one day, in within 30 minutes or 1 hour, if you can make $2,000, some people make $2,000 on their monthly salary on some job, and you are making 2,000, that much money dollar in 30 minutes, in 1 hour. So see the potentiality of making money and growing your money quick. If you can make this kind of gain, you will be making more money than whatever the people are getting out of from salary, like on a monthly. Some people gain monthly salary like $5,000 or $6,000. Some trader made that much money within 2 or 3 days, sometimes in one day. People who tend to decide with trading with big amounts. So that is a big potentiality of making money if you are a good trader, if you know and can pick the right stock and know the timing and psychological advantage, if you study and have the sort of good psychology in terms of analysis and understanding about the market, your study research can make you a lot of money out of stock trade. And that is an amazing thing for you to take an advantage of this kind of price momentum and from the stock market. You can make a lot of money out of trading if you have the right mentality, attitude, views, perspective, education, research, your experience. That can make you a lot of money over time. So try to take advantage of the situation, try to be a better trader by understanding about the market. Try to you know win more times than you are losing, and just try to be adaptive according to the market situation. If you're continuously focusing on the stock market, one day you will get it, and when you get it, that kind of thing will be a blessing for you in terms of making a lot of money, and that will going to change your life, your family's life, and you can become an entrepreneur and do some amazing things for this country. And that's the way to do it. I mean, if you are a good trader, if you are a good learn and study the stock market well, that sort of thing you can do later. So thank you very much for listening to my video. I just wanted to say everyone thank you. I hope a lot of people have take some advantage out of my thoughts and the strategy that I've shared, and I wish you best of luck on the stock trading. Thank you again, and bye. Thanks.